You were responsible or involved in this $1 billion acquisition of Alibaba, which seemed like a lot of money. Just today, Greenlight Capital and David Einhorn are out saying Alibaba is so valuable all on its own, he wants to make an investment in Yahoo. Lots of people in the markets followed him today. What did you see in Alibaba at that time at $1 billion that was clear to you it was going to be something of great value later?
Well, we spent many years. We've been at Yahoo. We were in China from 1999, and trying to find a great management team that was entrepreneurial and aggressive. We found Jack Ma, and we found a fantastic team that he put together.
Big valuation that you guys got in for, though.
We paid $1 billion for 40% of the company. In 2005, that was seen as a very aggressive investment. Obviously, we believed in the future, and we believed Jack could build this into a very large company, and he's done a tremendous job. And you only see the public market component of this. You still have the Alipay, the payments business, is similar to PayPal, and you still have the private marketplace business similar to eBay. So there's a lot of value in what he's created.
I bring that up because for our viewers, I want them to say why they should be listening to another white guy in a tie, but because there are many other white guys in ties in this room. But you've been able to identify these really big opportunities. So now you're focused on green and clean tech. Where are you focused in particular in that area?
So a lot of my background is clearly in technology, and at the intersection between technology and energy and technology and the water sector, water sector, two of the largest opportunities out there, because these industries historically have not been run for efficiency. They've been run to sort of provide scale, and yet we're running into significant issues when it comes to energy prices, future energy prices, driven by supply and demand of fossil fuels, driven by energy security concerns. The water sector, there are tremendous issues in the water sector in terms of providing fresh water to parts of the world that need it, and where climate change is having an impact on rainfall, where existing infrastructure is corroding and rusting and not delivering what's needed.
With such limited time, tell me one water investment that you really like right now that you're obviously invested in.
We have an investment in a company called Seven Seas Water.
Seven Seas Water?
Seven Seas, and we build desalination plants that are extremely energy efficient. And today we provide them to a number of islands in the Caribbean.
Now the big thing in desal plants right now is the power used to do the desalination. I'm doing this is my hand motion for how desal works, but it kind of is how desal works. Spinning the water around to get the salt out. The devices use more power than the water, so much power that they're very energy inefficient.
Well, 40% of the cost of desalinating water comes from the energy. So having energy efficient heat exchangers that recapture the heat that's used in the process is a very important part of keeping your costs down. We have a team that runs this company that came out of GE, that were some of the best guys.
What's the name of the company? So Seven Seas. Right?
Seven Seas.
And so you're competing with Dwyer, and you're competing with some of the other guys that do that same technology.
We operate at an end of the market that's smaller than many of the big desalination plant operators, and we run them very energy efficiently. We also pre-build them in containers so that whenever a customer needs water, we can have it literally on site within weeks, providing them with water. And so it's a very attractive business model. We typically will generate a 25% unlevered IRR for each of the plants.
Unlevered IRR, an investor rated return.
That's correct.
For those doing spelling bees at home, or those who are scoring at home, or those of you alone. Now, what else in that sector that you like?
So in the agricultural sector, today 70% of the water in the world is consumed by agriculture. Overall now, in the developed markets like the US, 50% of water is used by agriculture, and 50% of that water is used inefficiently, is basically wasted because it's used flooding fields with water, or it's using sprinkler irrigation systems. The opportunities to bring more efficiency by using micro irrigation or advanced irrigation systems that are watering the plants at the plant level, as opposed to watering the fields and the soil, and monitoring the health of the plants, and just using water in a much more efficient way. That's a big opportunity.
What's the typical size of your investments, and what kind of returns are you? Everyone wants a gazillion return. What kind of returns do you think you might get?
So we're growth equity focused, and we invest up between $15 and $30 million per investment into a company. We're investing in companies that already have a proven technology, and we can help them scale across the world with the technology. And
it's an interesting level which to get invested in. A lot of the companies we talk to on our show, or a lot of the investors, are backing three guys with a business plan and a computer program they're writing, or a new social networking idea or something.
Sure.
You're going in with big bucks, but at a later stage for these companies.
There are a lot of very proven technologies that actually exist in the market that not a lot of people are working with. And you take those technologies and you take a team that has a lot of operating background, so clearly having a lot of operating background myself and my partners, we help these businesses build their teams, make acquisitions, positions in other countries, expand into new markets. That's really building the companies up and scaling them to where the markets are. And the energy market's a global market, the water market, same issues around the world. And
now, when you look at these businesses, quite often they so rely on tax breaks and subsidies to stay alive. Certainly that's been the case with solar, where solar works as an investment when there's a subsidy in place to pay for it, and when the subsidy goes away, the investment turns crummy.
Sure. The majority of our focus is on resource efficiency, so a return on investment-based products and services, where it's very measurable, very tangible return. I'll give you an example. A company we're investors in is called Green Road. They have a software service that...
Oh, so Green Road?
Green Road. So they offer a software solution to fleets that have trucks and buses, and it goes in the vehicle and measures the driving behavior of the driver, and it gives feedback to the driver on how are they driving with respect to both fuel efficiency and safety. And when we implement these in fleets, we see a 50% drop in accident rates and a 5 to 15% drop in fuel consumption. So the payback is 6 months. And I was just with one of our largest...
Payback for the investors, but
for the customer.
We're almost out of time. So when you look at your investments, do you imagine these kinds of things? Typically, in power and infrastructure, you're looking at 10, 20-year payoffs to get to a point where you're making some money.
No,
as a venture investment, you got to get there faster, right?
Our model is a private equity model, so we will look to own a company for between 4 and 6 years. We would expect to achieve 3 times the return on our money. We feel very comfortable with that because there's so much opportunity in the sector.
All right. Toby, thanks a lot. Toby Coppel, really glad you could join us. Interesting sector you're in. We'll keep watching what you're doing.